Should I consider a level funded plan? I'm a small employer and my accountant says this is a great idea. I should go look at a level funded group health insurance plan. Hi, this is Kathy Bukowski. I'm the owner of CB Health Insurance, and this is the Small Business Benefits YouTube channel. And today we're going to cover the topic, should I consider a level funded plan? And most people say, what is a level funded plan? Well, it's a hybrid between a fully insured health insurance plan and a self-funded plan. Now, what is fully insured? What is self-funded? So let's start there. Fully insured plan is like an ACA small group plan or an individual policy. The insurance company is paying the claims. They are 100% at risk. You pay a premium and there's no flexibility. They tell you what you pay and you know what your deductible and your out-of-pocket is, but they're 100% responsible for all the claims. Self-funded is the opposite. The employer, and these were for large companies, typically 100 employees and more, but a lot of times you'll see companies with 1,000, tens of thousands of employees, and a lot of union plans will be self-funded. And it's the employer that is paying the medical claims for the employees with the idea that they're saving money on these plans. Now, there is typically a stop loss, a kind of an umbrella policy, so to speak, that once you hit a certain level, they do insure over and above that with an insurance company. You know, it could be $1 million of claims, and then the insurance company takes over and they pay that premium. But that is a self-funded plan. In the small group marketplace, a true self-funded plan really doesn't work because it's based on the law of large numbers. So, being creative, the insurance companies came up with this alternative called level funded. And so it's kind of a hybrid in between. And the way it works is it's for the small group marketplace, right? Less than 100, although it can be higher than that. And typically at least 10 employees or more. Now, there are some products on the market that came out where you only need 2 insureds. And I question whether that's a good idea because, again, the concept works on the law of large numbers. But with a smaller employer plan, a level funded plan, they're going to give you a level premium so you kind of know what your liability is, worst case scenario. And in that premium, some of that money is going into the claims fund to pay the claims. If your experience is better than what they expected, you could actually get a refund of premium or have a very good renewal and you're not going to get a big rate increase. So that is the upside of doing a level funded plan. Again, this works well for healthy groups and the law of large numbers, but a couple of things you need to know. When you apply, you can get a quote, but it is fully underwritten, meaning everybody has to answer medical questions, and the insurance companies can decide to accept you at that price or at a higher price or decline you. So it is not guaranteed to be issued. And if you have a lot of medical issues going on, if there's a lot of claims going on, you probably should not be moving to a level funded plan. Second of all, the level funded plans do have to comply with federal law. However, they don't have to comply with state law. So, for example, COBRA is the federal law for groups of 20 employees or more. If an employee leaves for any reason, you have to offer them continuation of coverage. In absence of that, most states have some form of continuation for small groups under 20. In the state of Illinois, where I'm at, we have Illinois continuation, also known as mini COBRA. When you're on a level funded plan, there's no state continuation. So you can't offer that. If you have less than 20 employees, you move to a level funded plan. There is no state continuation for terminated employees. So that's really important to be aware of. And last but not least, the employer, another potential negative, is responsible for some of the ACA reporting. The Affordable Care Act has some reporting. In a fully insured plan, the insurance companies do it for you. When you do level funded, you're responsible. Now, most employers are not going to do this. They're going to hire somebody to do it. So you need to take that into consideration. Generally, these plans work best in the small group marketplace. One, if you have a healthy group. And what I've seen in the past is groups that have moved to the level funded will have premium savings for anywhere from 1 to 3 years. But then they have a bad claims year and you literally could get a 50-80% rate increase. And now you're going back to fully insured. So that is the downside. So if you're considering this, be sure to get a quote from your broker, take a look at the numbers, see what the premium savings are, see if it's worth the risk to move to this. And, generally speaking, in my opinion, I feel like a small group is just buying some lower premiums for a little bit of time, and it's just a matter of time before they're going to be right where the fully insured market is. So, my recommendation is usually to have 20 or more employees before looking at fully insured. But talk to your broker, or if you want to give us a call, feel free to go to our website, cbhealthins.com. If you like this video, give us a thumbs up. Don't forget to subscribe. Thanks for watching.